the market is going to the upside, and then Jerome Powell comes out and says one tiny, slightly dovish thing about the money policy.
To returning inflation to our 2% goal.
Short positions in the market right now. People with short positions, they're getting a little bit scared. We have CPI coming out in less than an hour, and later on today also the FOMC meeting. Based on what's happening with the CPI data, we potentially going to see the first upwards move in Bitcoin. So we only need to be a little bit patient here. And potentially when you see this video, CPI came already out, but there's still FOMC that could change the whole direction the market is going here right now. So CPI is coming out at 8:30 Eastern Standard Time, and the FOMC meeting is at 2 p.m. Is the FOMC meeting today, where Jerome Powell will have its speech and tell us what's happening with the inflation. So of course, if CPI is coming in as expected or lower, that will lead the way for a massive pump, in my opinion, across all risk on assets. So, and we see the first signs of that for a massive pump coming here when we're looking at the M2 money supply. So you have to understand the M2 money supply was contracting and sucking out the liquidity out of the traditional markets. Hence, we had issues in terms of liquidity also in the crypto markets. Now, for the first time in over a year, we see an uptick in the M2 money supply, which means the overall global economy is now loosening up a little bit and liquidity is coming back into the market. And this will lead to more liquidity also in the crypto space, which means we see more upside in general in the market, because that's what's going to happen. Every time when the M2 money supply is going to the upside, we usually also get a spike to the upside in Bitcoin and other assets here. When we're going then into Bitcoin, into the FOMC meeting, something really interesting unfolding here every single time when we're going into FOMC is that 2 days prior to the FOMC, we always see a pre-FOMC dump happening. So you look at this, guys. Look at this here. Pre-FOMC dump happening. Then here, FOMC, here 1st of February, and we started to go up again. In March, we saw the same thing. Here where the line is 48 hours before. On the 18th of March, we started to dump to go to the downside. Then here on the 20th, FOMC meeting comes out. We start to go to the upside again. Then here in the 29th of April, 2 days before FOMC, we dumped to the downside. 1st of May, we started to reverse back to the upside. Here now, over the last 2 days, same thing. We started to go to the downside. It looks like that we have a bottoming pinball candle here. Now potential reversal after the FOMC meeting back to the upside. So we saw this now 3 times happening in the past. Again, historical events does not mean that we can predict future events, that we get the same outcome here, but it is statistically a high probability that we keep going in that manner. Now, in terms of our correction phase, we are getting really close here to the 102-day range level. It would make sense to get today a nice pump to the upside, also because of a lot of indicators are pointing to that fact that I'm going to show you in a moment. We are now 90 days in. I actually have to extend that line here by a day. 90 days in a corrective move, and that has to come to an end. We cannot go on forever to the side. Bitcoin has to make a decision, either go to the downside or go here continuously to the upside. And because we're in a bull market, the direction should remain to the upside here. We went now long enough to the downside, so a pump, in my opinion, is the most likely outcome here in the next coming hours and the next days here. The only big question that we need to ask ourselves is, will we take out immediately the all-time high, or will we just go above $70,000 and then consolidate between the all-time high and the $70,000 level? One other indication here based just on the candlesticks is that we have here an inverse head and shoulders pattern that has not changed. We only need to confirm that with a small move here to the upside by today or tomorrow. And again, in the next couple of hours, we should get a proper move here. I also want to just remind you guys, around the FOMC is always a lot of volatility. That's why you have to be a little bit cautious here with the CPI data coming out first and then getting the FOMC. So what could happen here is, if we get CPI as expected at 3.4% or lower than that the market is going to the upside, and then Jerome Powell comes out and says one tiny, slightly dovish thing about the money policy, and we're going the market, and we're going to see the market to retrace here, and then only later we are coming back to the upside. So I want you to be aware of that. If you want to trade FOMC, I will give you some entries for Bitcoin, but be prepared that we might see huge swings over the next couple hours. When we're going then into the 4-hourly chart, we have taken out the first liquidity pocket here, the footprint that was left behind, this fair value gap at $67,900 approximately. We actually went a little bit higher than that. Remember, guys, I mentioned to you, usually that's what's going to happen in the crypto market. When we take out one of these fair value gaps, we usually overshoot them to the upside and also to the downside if they are below us. That's what we were experiencing here. That's why we went to $68,030 and are retracing from that. As we speak. But in 11 minutes, the next 4-hourly candle is opening here and could continue to move here in direction of the next fair value gap around $68,500 to $69,310. If we can hold this fair value gap that we are in here right now while you're watching this video, and the next 4-hourly candle for the first 30-60 minutes stays within that range, you can take a trade at these levels. The only thing that I would tell you is set your stop loss here around $67,100, just to protect you if we see some volatility coming in around, like I said, CPI and FOMC, and then just keep it there. And once we are kind of like at 68,200, you can raise it to your entry level, and your take profit, the first one, will be here at 69,300. So for multiple reasons, 69,400 is a really, really crucial support resistance flip level. You have seen it, in the past. We were making an egg dance, my German again, an egg dance around that level here for quite a while before we broke it to the downside. So the bears needed some time to actually break that level since we had claimed it to the upside. When we are coming back, it will be the same thing in terms of resistance. We're going to have the same problem once again to break through that. So make sure that you take a little bit profit beforehand, before we are reaching $69,400-$500, and take something off the table, raise your stop loss. And if we just break through that like a hot knife going through butter, then of course the final take profit area for that specific trade setup would be all the way up here at $70,600. Previous week low is the level that we are trying to reclaim here on the daily chart right now. We still have a lot of time to do that. We have 3 days left to reclaim that. So you should just make sure that the Bitcoin price is closing above $67,900. If you want to take a swing position, then you can enter a swing position from here and trade this into a potential new all-time high, potentially even and ride this until the end of the bull run. That's completely up to you how you want to do that. For a swing position, either to add to it or to open one, that might be your spot where you want to do that. If you would have missed yesterday the move here into the mid-range level that I pointed out. In terms of the order book, the heat map, you see here also around the $68,200 and $400 level, there is some resistance that we need to break through if we want to move into higher levels here on the shorter time frames. And to the downside, the next bigger level of support, so look how far I have to go down, is still here at $65,300. The short positions in the market right now are already decreasing. So we're seeing here people with short positions, they're getting a little bit scared right now. So we see here a small retracement in terms of short positions, which is of course good. Good for us. Now what we are waiting for is a massive push to the upside to basically liquidate everybody that's still short here in the market. So we see this also when we're looking at the long and short ratio. More and more people getting here in a neutral position, but the bearish side is not really shrinking that much. We have shrunken here by 2% since the last time that we looked at it. We were at 51%, now we're at 49%, and the longs are at 29%, and 22 is neutral. So, and that tells me people, especially smart money, is on the sidelines waiting for CPI and for FOMC to see what's going to happen there, and then act accordingly to the price action that is going unfold around this event, and then they are going to position themselves once again in the market with derivatives products. On the liquidation levels, here the direction is pretty clear. We have only over leveraged positions above us, so it makes sense that into FOMC we would come around CPI. Again, if the numbers are as we expect, and for sure also you expect, it would make sense that we pump here all the way up to like $71,000 to take out all these short positions here. And then again, the playbook could be around FOMC that we come back, test the EMA ribbon, bounce back to the upside after Jerome Powell is done with his speech. So be prepared that this might be the playbook. The bearish scenario would be we come up here, Jerome Powell comes out and says something absolutely bearish. We are not cutting interest rates for the next, 12 months. We still have to wait, blah, blah, blah. Then this could lead to a bigger retracement back to current levels. So, and that will have a massive effect on altcoins because they are just coming back to the upside. And that would hammer them and bring them even lower than where they were all the way down here yesterday. So, and I can tell you my positions, my heart was bleeding, guys. My heart was really bleeding when I looked at them. Now in the liquidation heat map, here also you see again a lot of confluence around the $68,200 level in terms of short liquidations. Once we're tapping into this, we should get a small short squeeze to $69,000 because we would break the $68,400 level. And you see the biggest concentration of short liquidity is still between $70,200 and $73,000. Here is the big liquidity that we want to take out. Here is $30 billion worth of short liquidity. So, and this is massive, and will be taken out. You will see it unfolding in front of your eyes. So I just want to remind you that no matter what's happening today, trust me, we are that close to get a giga pump to the upside. Now, when we're looking at the USDT dominance, the dominance is retracing as we were expecting it yesterday already, and also called it yesterday that potentially we're going to see a retracement today here to the downside. Now we only need to see here more follow through to get a confirmation for that. I told you this inflection point with the downward sloping trend line at the horizontal line is a big resistance level for the USDT dominance. If we would have broken through that and closed a candle body above that, that would have been really bad and potentially would have meant continuation to the upside, which would have meant the markets overall would have bled even more. So that we are getting a rejection today here is a bullish, one of the other bullish signs that we are seeing. We only need now to break here above 4.56% again and see some continuation to get a relief bounce in the market that will bring us back above the $70,000 level. Ethereum also was bouncing here already. Guys, honestly, I'm going to call it. I say we're not going lower than what we have seen here for a while, which was $3,420. I'm not seeing it that we go any lower than that, even though here is still a fair value gap down here in that big candle from 3,127 to 3,400. That is still untapped. So that remains open and could be potentially tapped in the future. I just want to put it out there that there is a small warning sign still written on the wall for Ethereum. But yeah, I just don't believe that anytime soon that gets tapped here. In terms of where I would take a position for Ethereum, if you were not able here around the 1.618 to take one at $3,500, I would wait, guys. I would wait for a reclaim of the 0.5, 0.618, $3,600. That is a safe level where I would enter if we get a 4-hourly close above here. A 1-hourly, 4-hourly close, then I would enter. And again, the next imminent target would be $3,870. There you want to take a little bit of profit, raise your stop losses, and then let us ride to the upside, because then you cannot lose anymore. You took already some money off the table, so you made some profit, and that's what you want to make sure of, especially in a bull run where you need any type of liquidity to add to your positions in bigger corrections that we are seeing here happening in front of our eyes. Then Ondo. I hope you were able to catch a trade down here in our entry zone. I was trading Ondo twice today. I actually regret that I got stopped out on the second position, because I would be nicely up here still on that. Now is not a good moment to enter, in my opinion. The next best chance that you get to enter here is if we are breaking this downward sloping trend line here along these wicks. So then that would be at $1.30 approximately. And be careful, because that's really close to that resistance from $1.33 to $1.37. I would only do that if you see a 1-hourly candle closing above this downward sloping trend line with a tight invalidation and a stop loss at $1.24, I would say. Yeah, like $1.25 actually. So at $1.30 you go in, at $1.25 so stop loss. That's a roughly 3% stop loss. And yeah, to the upside, the initial target would be for me here $1.47. Once we are breaking above $1.33 and $1.37. And then potentially even higher to $1.68. And that can happen quite quickly. Ondo is so strong in this whole downwards move. I would be not surprised to see here a God candle pumping here to the upside. Then Injective is another coin that is really, really strong here in this correction. Here also, if you were not able to buy Injective here along the bottom, so you can technically buy it now. It would be not too late to buy at these levels, but if you want to play it really safe, you want to wait for the downward sloping line here, trend line, to be broken before you enter a position. And if you want to be super, super safe, you even wait for the horizontal box here, that support level, to be broken to the upside at $29.14 before you open a position, and then you can trade this into $36 and $40 to the upside. Another coin that is showing a lot of strength here is WIF, Dog with Hat. Here on the 4-hourly chart, I must say, in terms of indicators, it looks like that we are running out of steam here a little bit pretty soon, even though the MACD is super bullish. The RSI has also a lot of room to go higher here, but we are going sideways here right now because of that downward sloping resistance, and we need to have a look here on the higher time frames really quick. Okay, in the higher time frames, we are not looking all too bad, but there's still not a valid bullish divergence, at least on a 12-hourly chart. Also on the daily chart, no bullish divergence yet, and I think on the 4-hourly was also. On the 4-hourly, we can make the case for a bullish divergence, I think. So if we look here at this, yeah. So here we have a bullish divergence, but I think it has partially already played out here with that move to that resistance level here at $2.70. So if you want to see follow through here, we need to break $2.70. That's your entry point. And then you can trade this to $3.12 and potentially from there into higher prices. If we come back down, the level where I would also open a position is if we come back down for some reason at $2.54. That is another level where you would open a position between $2.52 and $2.54. Then Render, also really strong here on the daily chart, holding the range lows. Currently, the MACD is about to flip bullish. RSI pointing to the upside. Stochastic gave a buy signal pointing to the upside. So what you want to see here is either a move above $8.70 with a 1-hourly or 4-hourly candle close to enter a position. The next imminent target becomes your mid-range at around $9.75. And once we are claiming the mid-range, it becomes the higher range at $11.91, and every time you just raise your stop loss, guys. So when we are tapping the mid range, then your stop loss is the lower range, and then when we are going in direction of the higher range, the mid range becomes your stop loss, and your take profit is the higher range. So that's how you make sure that first of all you don't lose any money, and that if the trade goes against you, that you actually make money by getting stopped out at the right level. And guys, that's it already for today's episode. I hope you enjoyed it. So make sure that you are subscribed to the channel, like this video, and activate the bell. And I'm going to see you in the next one, I hope with a lot more money.